how I stopped wanting to buy stuff without being miserable. I used to have a spending problem, so I took my background in economics and I was sure I could figure this one out, and it proved to be a bit more tricky than I thought. So instead, I spent weeks researching science-backed ways to reduce my impulse spending. So in this video, I'm going to share some of the key things I consider or techniques that I've adopted in order to stop wasting my money. And at the end of the video, I'm going to go through an easy 3-step process that you have to go through to make sure you're picking the right methods for you. So let's get into the first one, which is spend more. If you listen carefully, I can already hear the minds of personal finance influencers exploding like 10,000 nukes being fired from orbit. But hear me out on this one. The concept is simple. There is a very large and very loud contingent of people online who'll tell you that living a life on cold beans, bread and water is the best route to happiness. I'm not one of those people. We've always advocated on this channel that not cutting the cost no matter the cost is a key way forward. There are instances where spending more money can actually yield you a better overall result. Let me explain. Would you rather buy a pair of shoes for a £5 that are going to fall to pieces before you make it back to your car, or spend a 20 and get shoes that will last you 6 months? The price to value trade-off is real, and understanding it can be a really easy way to rethink your spending. But this comes with an important caveat, which is, most importantly, don't use this as an excuse to buy more expensive shit that you just don't need. Which leads me to my next point. Mind the margins. So whilst we have established the case that occasionally spending more money can get you more value and that value is worth it, the question ultimately has to be, how do you decide this? Well, to do that, we need to look at marginal cost and marginal gain. The marginal cost is the additional amount you have to spend to get the extra benefit, and the marginal gain is the incremental benefit you get. So let's look at an example. Let's say the cheapest possible accountant I can find is £50 a month to do the accounts for this channel. That is a bare bones, absolutely nothing service. But for an extra £10 a month, I could go to a different accounting firm who'll give tax advice too. And suddenly, that changes the dynamic quite significantly, because that extra £10 a month could quite quickly pay for itself if I'm getting tax advice on how best to manage the company's accounts. So focusing not just on the price, but also the value of what you're getting is such a worthwhile way to look at purchases. And just so we're clear, don't get me wrong, there are plenty of companies that will just charge you more and not necessarily give you more. Watch out for that, and always ask yourself, if I'm spending more, am I getting more? Opportunity cost. After you've earned money, you can only spend it once, so it makes sense that when you do spend it, you want to get the most for your money. So what is opportunity cost? It's a term in economics that's defined as the value you forego when you make a financial decision. So asking yourself, if I didn't spend my money on this, what else could I be spending my money on? And asking yourself this can be a super powerful way to help you determine if this is the best use of your money. Let's look at an example. Let's say you work in a sales role. You get a bonus of £500. You could go out and buy some Louis Vuitton shoes and look very fly and very sharp. That's option number one. Or you could spend the money on a course about how to improve your sales techniques, how to build your relationship with clients, and work on building your confidence. That sales course is an investment in your future self, which stands a pretty good chance of paying for itself. The Louis V's are going to be ruined by a single dog shit that you didn't see on the street. But if you're just starting out in your career, the sales course could change your career and income trajectory for you. And doing that early in your career can make all the difference. This diagram shows it quite nicely. Initial bumps early on in your career makes such a difference over the lifetime of your earnings. These are the critical decisions that will really help shape your financial future. And that brings me on to money spent versus money invested. This is a very simple concept, but you'd be surprised at how many people get this one wrong. If we stick with our previous example, which is the money spent and which is the money invested? The Louis V's are the money spent, but the sales course is money invested. This is the simplest way to look at it. Money spent yields you no return compared to if you'd held it in cash. The Louis V's are only going to depreciate in value. Doing an extension to your house adds value, therefore can be considered money invested. Buying a midlife crisis mobile? Sorry to say, that's money spent. Money well spent, but money spent. Reframing these bigger buying decisions really helped me to make more sensible buying choices, but still let me enjoy my life. And whilst we're here, don't get dragged into all this bullshit. This Rolex is only going to be more expensive. It's only going to up in value. Be real with yourself. You wanted to buy the watch because you wanted to wear the watch. You're just working backwards from that conclusion, and at this point it's just meth head maths. Pay yourself first. This is a top tier one, and it's something I first read about in Ramit Sethi's book, I Will Teach You to Be Rich, a book which we will recommend on this channel for the rest of time. They'll be flying around in spaceships, and I will still be recommending this book to people. So how do most people manage their money? They get paid, they cover their needs, the roof over their head, the food bills, and then they spend on their wants, going out, eating out, movies, theatre, and then they save and invest what's left, if anything. But paying yourself first tweaks that. You get paid, you pay for your needs, then you save and invest, and then you look at what's left and you start to pay for your wants. This is such a small change, but makes such a big difference. But people say, oh, blah, 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 I want to enjoy my money. This is flawed thinking. Would you rather go out and spend money on your wants knowing that you haven't saved and invested? Or would you rather go out, spend money on the things you want to do, knowing that you've already taken steps to secure your financial future? I know which one I prefer, and this is super valuable and, in my view, much less stress-inducing. And I look at my own life. My wife and I have dinner out every Friday night from a place just down the road. It's a weekly ritual that we've indulged in ever since our first son was born. Becoming first-time parents during a national lockdown in a global pandemic was a stressful affair, so we committed to making sure that we had time every week that we could spend as a couple. And this costs me hundreds and hundreds of pounds every single month. But you know what? I just don't regret it. And that's because I know that I've already paid into securing our finances and future, and this is an expense which isn't hampering that journey. Per hour cost. As we know, time is money. So here's a thought. When you're going to spend money, why not think about it as a measure of time rather than in pounds, pence, shillings, rubles, dollars, rubles, rupees, or euros? Is what you're about to spend your money on worth the cost to you in time? Here's what you do. Get your bank statement, find out what your take-home pay is, what actually lands in your bank account on payday, and divide this by the number of hours that you worked that month. So let's say you work 160 hours a month, a 40-hour week typically, and you make £2,000 per month after taxes. So that gives you a take-home pay per hour of £12.50. So if you're in a restaurant and you want to order a £100 bottle of wine, is it really worth working a full 8-hour day just for this bottle of wine? For a bottle of wine that might only last you until before the desserts arrive. This is another small change that has really helped me amend how I think about money, especially when it comes to the smaller items that can add up over time. Now, don't get me wrong, if wine is your thing and this is your one-off meal, maybe you can justify it. If it's every Friday night, you can't tell the difference, don't know what to tell you. Having a budget. Building a budget with some money in that includes having fun is absolutely key. At this point, there's plenty of evidence to suggest that going completely cold turkey and building no fun into your budget is detrimental to your longer term financial goals. So I think it's perfectly reasonable to take a little bit longer to hit your money goals, but knowing that you're increasing the chances of actually making it there. There's no point saying you want to save £10,000 in a year, knowing that there's only a 20% chance that you'll make it. But saving £10,000 in 18 months, but there's a 90% chance of you making it, seems like a much better deal overall. Wait it out. Incorporate a cool down period every time you want to spend money. Obviously, the bigger the purchase, the longer the time period. You don't have to wait 24 hours to buy a Mars bar, but just saying, if you want to buy a new TV and it's going to be a few £100s, just wait a few days. Do you really need it? If you're going to buy a new car, maybe just wait 30 days. It's a perfectly reasonable way of making sure that you're not just looking for that dopamine hit. This is something from James Clear's book, Atomic Habits. Atomic Habits is a very simple concept for a book, and a book that we will always recommend on this channel. Really fantastic, and discusses something that we talk about a lot on this channel, that the consistent application of small, good financial habits is ultimately the key to personal finance success. So what are my final thoughts on this? Well, one of the key things that I want to mention at this stage is, as we talked about at the beginning, there are 3 critical points that can wipe out all of this good work. The first thing is, be honest about yourself with your relationship with money. If you're left to your own devices, are you naturally a spender? Are you naturally a risk taker? Once you've got this honesty, picking a strategy that works for you with your money goal can be so important. And the last thing is, pick strategies that work for your finances. If you're self-employed and you don't have a consistent paycheck, then having a very strict budget may not work for you. But all this is for nothing unless you watch this video here about how you can be more frugal with just the smallest changes in your life to help you stop wasting money. Thanks very much for watching. If you've made it to the end of this video, please like and subscribe.